Singapore economists have upgraded full-year GDP growth this year to 4.1%, up from 2.4%. That's according to the central bank's survey of private analysts who say momentum will likely come from a sustained tech cycle upturn. Now, growth targets for all major sectors were raised from 3 months ago. Outlook for those in manufacturing, wholesale and retail trade and exports improved the most. Economists also expect GDP growth next year at 2.3%, up from previous estimates of 1.9%. Geopolitical tensions were cited as the biggest downside risk for trade-dependent Singapore.
We've experienced significant volatility and the US tariff roller coaster this year. And I think trade policy uncertainty has been reduced compared to Liberation Day, but we cannot fully rule out a re-escalation of tariff tensions and trade war due to the unpredictability of the US President Donald Trump's administration and ongoing US-China strategic rivalry and fragile relationship between them.
Now, the survey also saw a new downside risk for Singapore. Almost 18% of those polled picked the AI bubble burst as the biggest challenge. Analysts say any abrupt reversal in valuations could dampen investor and business sentiments, leading to a deep pullback of Singapore's maturing electronics, exports, and manufacturing sectors.
There's a lot of money being spent on AI investments, whereas the path of return is not as clear right now. So those risks have certainly meant that this has come to be one of the top, risks in the mind of the Singapore, people as well. But, when you take a little bit of a more fundamental stance to it, there are cash flows supporting this whole AI theme. There are real productivity use cases, which you and I can probably see in our daily work lives or our personal lives as well.
Singapore's key exports surprised on the upside in November with an 11.6% on-year growth. Leading this were electronic products and pharmaceuticals, which jumped nearly 370% on-year. One analyst says this increase could be partly driven by concerns over possible sectoral US tariffs.
Perhaps what we are seeing now, pharma companies around the key producing area, whether it's on producing the ingredient for the final product that can be put together, whether it is in Ireland or whether it's in Puerto Rico or in Australia, we are seeing some of these sort of being pushed forward in case there is some announcement.
Overall, exports to most of Singapore's top 10 markets rose. Looking ahead, analysts believe positive growth will be sustained in the coming months, though they warn that the impact of US tariffs on global trade is more likely to be felt next year.
As contracts get renegotiated, prices may be adjusted, so the demand may also be tapered as well. Also, I think we see that many of the global economies, while there's some resilience in their economic fundamentals, but consumer sentiment may still be more fragile. So this may point towards a bit of a slowdown in terms of the export demand, which I think Singapore and ourselves, remain cautiously optimistic about.
And for more analysis, we're joined by independent economist Dr. Arab Raha. Now, Dr. Raha, we're seeing some moderate growth of about 2.3% that's forecasted for 2026, and that's down from 4.1% for 2025. Is this the new normal for Singapore's economy?
Yeah, good evening. Firstly, thanks very much for inviting me. Actually, if you take it's the second sort of forecast that's a bit off, because if you saw, there was a massive upgrade to expectations of what we are expecting this year. And that has been led pretty much by what is happening in terms of the external sector. There's a bit of a bounce from the pharmaceutical side, but that tends to be volatile. But the real bounce is coming from AI. And given Singapore's external orientation, that's really what's been driving the upgrades that you're seeing. Bit of a tone of caution. I was looking at what people are worried about, and if you go back to a quarter, then there was bursting of AI bubble. Not a single person was worried about it in September. and now about 41% are worried about it. So there is some change coming there in the thinking. Yes, it's helping us tremendously in the short term, and it will help us a lot in the long term, but there could be some volatility along the way.
Yeah, and concerns about the AI bubble burst aside, what sectors do you foresee being the main growth engines in 2026? Can pharmaceuticals and electronics keep its momentum going?
Well, pharmaceuticals tend to be very volatile. And, given the nature of pharmaceuticals, it has a pretty steady outlook. It's just that you can't predict how it's going to go month to month, quarter to quarter, because it tends to be volatile. But the overall picture for pharmaceuticals is probably quite steady. Electronics, yes, there's a boom going on. And look at the upgrade that has taken place. It's not going from 2.4% to 4.1% in just one quarter. It's a very big upgrade, and that has to do with what's happening on the external side. So I think we are, I guess, remain optimistic on what's going to happen on the external side, but the notes of caution are going up.
Yeah, let's zoom in on exports now. Nordex to the US has surged, but the trade climate is quite volatile at the moment. So how sustainable is this growth?
Right.
Or do you think it's likely to be a short-term kind of spike?
Well, I think it's volatile. It's going to be a short-term spike. Ultimately, exports are driven very much by what's happening in terms of global growth, what's happening in the US. And the US economy is most likely going to slow from here, which is that you're already seeing the signs. If you saw the latest unemployment numbers, they've ticked up. There are other signs that the US economy is slowing. There are signs that the Chinese economy is slowing. So I think the outlook for exports is relatively cautious. Now, I say that with some degree of that you will see short-term volatility because of the way it has come out due to tariffs, due to slightly erratic trade policy in terms of the US. There has been some playing around with exports, so to speak, between which month it goes on, which quarter it goes on, and you're seeing that. But the overall picture ultimately is driven by external demand and trade policy, and both of them are relatively negative right now. So you will expect that exports will slow. The current pace is unlikely to last. I mean, look at the export growth that you're seeing out of, say, an electronics exporter, Taiwan, for example, very, very strong. It's very unlikely to last.
Now, if you look at the other Nordex in key markets like Indonesia, Hong Kong, Japan, and even Thailand, those fell. So what are some factors causing this dip? And what needs to be done to then turn those numbers around?
Yeah, that's what I said, that if you take the world, if you take out that one sector, which is what is happening on the electronic side, the world is slowing. So you are likely to see some sort of push coming in terms of, I'm not really sure what you can do about global demand to try and get exports going. We have had one bit of benefit, which is to say that with the tariffs that had taken place, you should have seen a fair amount of US dollar strength. We haven't got that because of other issues in terms of loss of confidence, etc. So our currencies in Asia have not weakened to the extent that they could have, which gives us some degree of flexibility in monetary policy. We can reduce rates. But exports is a hard one to do because it really depends on global demand, and unfortunately, we don't control that.
Well, inflation also remains unchanged. Do you see it holding come 2026?
Yeah, I don't see a problem there in terms of inflation. And in fact, if you see, from the demand side, I see there's a degree of slowdown that's taking place, which will keep inflation under control. And then the other sort of driver of inflation, which is energy prices, they've come down a lot. So I don't really see a problem there in terms of inflation, which gives Asia a fair amount of flexibility in terms of monetary policy. I mean, inflation coming down or at least staying on the softer side, plus the fact that our currencies have been relatively on the stronger side, gives that flexibility. So that's one bit of good news for sure.
Dr. Raha, thank you for sharing your perspectives with us. That was independent economist, Dr. Arup Raha.